Good morning, ARMR Insiders. Welcome to the morning meeting. Hope you all had a great weekend. I'm going to lay out for you just some thoughts. After a sip of really good coffee, I'm going to lay out for you some thoughts. Day trading, swing trading, investing, and some research ideas, just some things that are on top of my mind. So getting ourselves ready for the trading session, let's get right to it. Don't forget, I'm sharing with you my own personal approach. This is how I run my own personal capital. So make your own investing decisions, risk tolerance, and all those things that I think you guys already know. Just to get our minds right for today, where are we in the process? I'm just going to talk off the top of my head now, but try to hit the points that I wrote for you in the captain's log. But basically, the market is kind of in no man's land to me, and maybe it's best for us to look at the S&P so you understand what I'm saying here. It's trading right kind of in the middle of nowhere to me. If you look at 2015, you look at 2018, you look at periods when the Fed's reducing accommodation, you go into downtrends like this, you can easily challenge the 50-day moving average. We challenged it once, pulled back, it can go back up there. You could even get up into this overhead in here. In 2015, it rallied after the first sell-off. It rallied all the way back up into the overhead. Then it rolled over and cratered. So there's no guarantee the market has to go down right now. All right. Rallies up here, I would look to sell, and sell-offs to test the low and hold, I would look to buy. All right. So that's kind of my philosophy right now. And so I guess my message right now is that I don't want to have any preconceived notions of what the market should do or shouldn't do. It doesn't make a difference what the market thinks I think the market's going to do, right? It usually trades the opposite direction. So we just have to clear our heads and execute what we see. So for me right now, the risk monitor is expressing confluence, which I love. All the indexes are negative based on our algorithms. That's right around the corner from bullish. So I don't want you to think, oh, that means the market has to crater. That's not what it's saying. It's just saying that at the moment, all the indexes are out. So there's no long opportunities, which puts them back into a confluent situation. So if we got a surge up, we might get all the indexes telling us the same thing. Let's buy the market. All right, I'll put money to work in the market. I mean, I'd rather be bullish. I mean, it really doesn't pay off for me to be bearish. And that's why most people you see on CNBC or, whoever else, you're watching, most of them are bullish all the time because they know the statistics. 80% of the time the market's going up. So they're going to be horribly wrong 20% of the time. Then people forget that they were wrong and they're going to be right 80% of the time because the market's going up and they're going to look smart. I mean, so that's just basically what they do. So it's really, because I run my own money and I'm just sharing with you how I protect my own capital, I tell you like it is, right? If I was just marketing myself, I'd be like all those other talking heads on TV and telling you, oh, market's going up, buy the market. Because long-term, people forget bad predictions and they always remember the one or two things that were right. It's just how it is. It's weird. So, but I'm working with real capital. I'm managing my own money. This is how I make a living. Right. And so I'm telling you how what I see in the market. And so the risk monitor is still red. The gamma is kind of neutral right now. We're right at 4,500 on the S&P, so it can go either way. The Investors Business Daily is bullish, right? And you read newspapers over the weekend and they say what a great week the market had last week because it closed up, right? So, what I'll be doing from a swing trading and investing standpoint is if the markets turn and I get a risk monitor green signal, I will be happy to put more money to work. And what we'll do is we'll be buying the beat up tech type of names because we already have a full portfolio of commodity names. So we would just take a piece of our capital and we would own, the beat up sector, which are our favorite tech names. Or we put some money in cannabis or any of those are favorite groups that are trying to put in a bottom, right? So that's kind of where my head is right now. I'm coming into the day. I'm saying I don't want to have preconceived notions. I'm happy for the market to go positive. We can put some more money to work. At the same time, looking back at 2018, 2015, we're in a bear market right now. That's where we are right now. It's a downtrend. I'd look to sell rallies and, buy weakness and double tests of bottoms. That's kind of where my head is today. So that's, and then I think it's also good just to look at the NASDAQ real quick. Okay. So, yeah, see, so that's kind of where we're at. From a day trading perspective, I just want to remind you guys about what our day trading process is. There's many different ways to make money day trading. The ARMR Day Trading Way has the highest probability of success after a sell-off in the market of more than an hour. Now, we can trade other setups. We can get involved if we want. But the fact remains that when we have our biggest days making money, like Friday, it's because the market sells off for an hour. And Friday, it was crazy. It sold off for exactly an hour. Then it turns and we have one of our 5 buy triggers tell us to get long in the market. And then we make a lot of money. The days where we struggle are days where we see little wiggles that happen in a shorter time window and then don't go anywhere, right? Or go lower, get stopped out, then have to re-up. And so I really have to reiterate, we don't have to trade every day. We could trade other things. We could trade individual stocks if you want. But when it comes to index day trading, we're looking for weakness either right off the open. So the market opens, it goes straight down, then 10:30 is the key time frame. If the market's doing other things in the morning and then starts to sell off, usually it's 11:30. That's the other thing I wanted to say. Write this down. Don't forget it. If there's only one day trade you want to follow with me, then I would say it's the Friday type of trade, which is to say 11:30 and 2:30 are incredibly important times a day. If we see reversals at those times, it behooves us to put money to work because the statistical probability of making money is so high. The risk is totally minimal because the stop is the low of the bar we're buying, right? I mean, just look at Friday's action. I mean, we bought it, went straight up. I mean, the best trades never challenge the low of the bar you buy. So the risk is small, the reward's huge. 11:30 and 2:30. We have to put those trades on every time we see them. Now, it doesn't mean they have to be long trades, right? So if the market were to be up in the morning, trade sideways all morning, can't really make any headway, and break down at 2:30, I'm going to be short the market. So 11:30, 2:30, we've got to trade that. We don't have to trade every day. Some days just don't set up our way. We don't trade those days. We do other things, right? So those are my thoughts on day trading. I don't want to have a preconceived notion of which way the market goes. Normally, if the market's higher at the open, I'm looking to either short that rally or wait for the hour-long sell-off to get long, okay? And if the market's weak off the open, then I'm really getting excited. I'm looking to get long in the first couple hours of trading. Whenever that crazy Ivan's over, that's when I'm looking to get long. So that's my day trading posture. Let's talk research real quick, and then we'll get to if you have any questions, and we'll fire up our live trading desk. Let's take a look. MSOS. These are some of the things at the top of my whiteboard. So, following our conversation about swing trading and investing, should the risk monitor go green, where would I invest? I'm going to invest in my favorite groups that have been destroyed. I've already got my commodity space, and I think the commodity stocks go up. If the market goes up, commodity stocks continue to lead. Commodity stocks might break down. If the market implodes, everything will go down. We'll have to get stopped out. But should we get a risk monitor green? My guess is energy and base metals. I mean, these things will be going through the roof, maybe precious metals as well. So we got that nailed. I don't think I would increase anymore. I got like 70% of my money in that space. I mean, separated between energy and precious metals and industrials, like everything in the portfolio, the dividend stocks, like everything. So I'm going to take whatever capital I have left, maybe 30%, which is my cash. in the ARMR Portfolio 1, because ARMR Portfolio 2 is not that long. We day trade and we swing trade, so that's different. But in our investing portfolio, we're about 70% long when you include the dividend stocks in that mix of a portfolio. So anyway, I would take that last 30% and I would get long either the indexes, depending on if I was conservative, or I would start buying my favorite groups that have been beat up, to get some exposure. So precious metal, So cannabis, you can't argue with the location, right? We're all the way down at the low. So we've completely erased all the excitement of the Democrats taking over Washington, D.C. It's all out, right? And so now we're looking for the bottom to form. I'd like to see it break the downtrend. I'd like to see higher lows and higher highs. If that starts to happen, I would get very interested in adding a piece of MSOS. All right. I was talking on Sunday about, the metaverse, and I think it's a huge opportunity. Just because Facebook's imploding doesn't mean metaverse isn't a huge opportunity. Just because Roblox and Unity have been destroyed doesn't mean they're huge opportunities. I always say this to you guys. I lived through this, and when the internet first got started, names like Yahoo and AOL and these names, they got destroyed and then turned around and skyrocketed and never looked back. So it's totally normal to see a new technology theme, an innovative theme, go through a wicked bear market. It gets everybody off the bus. They think it's no good anymore. Oh, it must not be anything important. And then they look back and say, oh my God, that was the greatest investment opportunity in my life. So I think the metaverse is huge. I was playing Roblox again, just watching my son play Roblox, over the weekend. First of all, he's hooked. He has tons of fun, and I get why he's hooked. I watch him play it, and I get it. There's just an unlimited amount of. It's almost like a puzzle game. It's like there's an unlimited amount of these puzzle games. It's the same type of character. So once he learns how to use it, it's easy to go from one game to another. So there's just an unlimited assortment of interesting things to play. You're playing with people all over the world. It's just brilliant. It's definitely the future. Okay. And the advertising placement is second to none. I mean, Lena can attest to this too, because of her daughter. My son says to me, what's Converse? I said, what do you mean? He said, look, Daddy, I could be on Team Converse or Team Vans. I mean, Converse and Vans are paying Roblox for that advertising. It's amazing. And it's not like an advertisement. It's like subliminal. He doesn't even know. Next time he goes into a shoe store, he's going to look at he usually buys Nike. He's going to go to the shoe. Hey, Dad, I want to own a Converse. Can I wear Converse sneakers? I mean, it's just brilliant. So these stocks have been destroyed, and now I'm starting to get concerned that they're going to get so cheap that someone's going to take them over. And so I'm starting to think, when do I put Roblox and Unity in the portfolio, even a starter position, because it would make me literally sick to wake up one morning and see Disney's taken over Roblox. And I don't own any of it. It would just make me sick. You can't invest on that thought. I mean, that's just not a reason to invest. And certainly Roblox could drop another 50% for all I know in a bear market. But I am beginning to look at Roblox. And again, it's the same type of situation as cannabis. It's all the way down towards the IPO low. I mean, now it's made a higher low. It's trying to put in a double bottom, and it's down to the IPO low. So somewhere in here, I mean, nothing's changed about their business. The revenues are blowing out. They're probably going to have a huge quarter. Nothing's changed. It's just a destruction in the space. At some point, I want to put a position on Roblox. I mean, if we got risk monitor green, the first thing I would buy is Roblox, and the second thing I would buy would be Unity. This was a beautiful chart breakout from here. Remember, this thing came public. So it hasn't come all the way down yet. It came public here. But it's just erased all of this. Meanwhile, it had a huge quarter. I mean, there's nothing wrong with the company. It's just the wrong market, but that sets up opportunity for us. So Unity, Roblox, right at the top of my list. I'm just trying to figure out, when do I start building a position? I mean, just like 1% of the portfolio in each, 2% of the portfolio. they drop another 50%. Okay, so the whole portfolio is down a little bit. I mean, it's nothing, right? But maybe it's just a foot in the door. And then continue to build a position as they build their bottoms, Erez brings up Disney and how they're, really making their way into the metaverse. See, I would view Disney as a company that'll make acquisitions, not necessarily a company that I want to own. I think Disney's probably the guy who's going to buy Unity or buy Roblox or, something like that. So I don't see anything in the Disney chart that makes me want to own it. And even if the metaverse is where they're headed, that's probably a couple years from having an impact on their bottom line. And I think what they'll probably do is go buy a company like, Roblox. And then just to wrap up on crypto. Crypto's not something I'm looking to buy right now. Then there's the entire mining group. So they've been destroyed. They've had a couple, up days. That's great. Bitcoin's, up another 5% today. And I do submit to you that, there's still such delusion all over Twitter about cryptocurrencies and Bitcoin. I mean, delusion to the point of people saying, as I quoted, I mean, and these aren't just stupid people. These are people that I respect and I follow. And, they were so right on the way up, right? And they've just been completely wrong all the way down. And the problem there is when people can't admit that they're wrong, it just makes everything else they say totally worthless to me. I mean, I'm the first one to admit I missed great swing trades on Bitcoin on the way up. I missed huge opportunity on crypto on the way up to trade it. So when I still hear these people telling me, literally, I read it today, Bitcoin only goes up, it's scientific. How can they say that? It just dropped 52% in about 2 months. So clearly, from a scientific point of view, it doesn't just go up. I don't understand. It's like, I'll be very interested in buying Bitcoin when these people finally lay down the mantle. I don't want to talk to him right now. So, anyway, so at some point, I will be a buyer of crypto. They've had a huge correction in 2 months. I think it will require some type of a bottoming structure to get me involved. I know that for sure. I can see how if we're long commodities, you can make an argument like gold and silver. I can make an argument for Bitcoin and Ether. I couldn't make that argument at $68,000 a Bitcoin, but down here in the 40,000s, in the 30,000s, I can. And so if we get some bottoming structure in these things, I could see adding, some of that to my portfolio, but I just don't, I'm not doing it right here. The first move off the bottom is just not for me. And then I'll see how it reacts. And when it comes back down and test that low, if we set up double bottoms, make higher lows, make a consolidation at a higher level, then I can start getting involved. So those are my thoughts on crypto. All right. So anyway, any questions before I move on here? Anything you guys wanted to go over that I've missed? Erez is saying DXC. Okay, I'll do that, and I'll see that, and I'll raise you an IPI. I really think I want to get some Intrepid Potash in the portfolio somehow. This is probably the number one fertilizer company out there. There's the breakout, there's the pullback, there's the the move higher. Now I'm just waiting for an opportunity there. I could see adding that to the portfolio. I'd like to get some agricultural, commodities in here if I can. That's silver up 2% almost today. Well, let's see if it ends the day there. We need a strong close to the day, not a strong open. Cecil and I have been talking about, the bond market. And I always show you guys this chart and say, this is just really, really ugly to me. But he did give me some good information there and corrected something I said over the weekend. So let me share it with you. The Fed has already taken corporate bonds off of their balance sheet. They did it in August of last year. Cecil reminds me. So thanks for that, Cecil. I forgot about that. So that's true. But this makes this chart even more concerning to me. It's not the Fed dumping their bonds. They're already out. So it's a real selling of corporate debt. Now, I understand Cecil's talking about the spreads and how they're not showing real fear. They're not showing real inflation. I get that, Cecil, totally. I'm not looking at this chart saying there's a 2008 type of financial crisis coming, which is what happens when those spreads blow out. I'm not even looking for that. I'm not talking about that. If the spreads actually blow out, and Cecil's kind enough to follow this market for us, and he's going to let us know if that's happening, the market will be in serious trouble if that's happening. Okay. So please keep us informed on that. Okay. But what I'm saying is, when I look at the charts of these ETFs, all I'm saying is stocks follow bonds. That's all I'm saying. Stocks always follow bonds. So and one of the reasons why I say we're in a bear market, other than the fact that the markets have been, some parts of the markets have been destroyed, and now the big indexes are coming down, is that I look at bonds. When corporate bonds are doing this, these are high grade investment. They're doing this. It's like a free fall. It's very difficult for equities to go into a bull market. Let's put it that way. It's almost impossible. And my entire career, equities follow debt. Now, it doesn't have to follow debt every single day. You can have counter trend moves. Debt keeps going down, equities skyrocket for a couple of weeks. I've seen that, but it always resolves down to where debt is. So that's why I'm looking at these ETFs, not so much the spreads, which would be like a financial crisis problem. I'm not, my guess is, Cecil, by the time we get to that type of problem, the market is already down huge. That might even be if spreads blow out, that might, to me, be a harbinger of the bottom. And the destruction will have already happened, is my guess. So anyway, just wanted to share that, but I'm really glad, and I appreciate Cecil's work in that arena. Geez, I don't know about Pinterest, man. Maybe I have to go listen to that conference call or something, but I just don't know. I've lost a lot of interest in Pinterest. I've lost a lot of interest in Pinterest. So I have to go listen to that call to see if I agree with that thought. I'd love to know why you think they're a takeover target. I don't know. They seem like a dying breed a bit. But maybe I'm missing something, so I'll go listen to that. So Brian OG, thanks for that thought. I'll go take a peek. All right, everybody, have a great trading session today. I'll see you on the live trading desk in a few minutes. And any questions, of course, all day. We're live on the trading desk all day and here in the Slack room. So feel free to reach out and share ideas. Okay, everybody, take care.